Welcome, everyone. This is Safi Russell from SDR Consulting, Inc. Welcome to Business Basics Friday. The purpose of Business Basics Friday is to provide value to small business owners, sharing different content from different, service providers and professionals in the industry. A little background about myself: I'm a CPA and enrolled agent, and also have a master's in taxation. And the founder and CEO of SDR Consulting, Inc., a virtual firm based in the New York area, but we do work with clients all over. And we mostly work with small business owners, helping them from business formation all the way through to tax preparation and all that fun stuff in between. And so today we have guest speaker Timothy Brown, CPA, who's going to be covering the basics of nonprofits. And so I'm going to have him go ahead and get started, and welcome and thank you again.
Hello, thank you, Safi, for allowing me to be on your platform. I don't take it lightly. So what we'll do, since we have a short time frame, we'll go ahead and dive right in. I'm going to share my screen, and what we're going to do is go over the basics of not-for-profit organizations. There's a lot of misinformation out there. What we are going to do is start out is basic things you should know about a 501c3 organization. First off, the 501c3 organizations are that they're named that because that's where the code in the IRS where they're derived from. Because there are more than 30 501c organizations, but 501c3, the charitable organizations, are the ones that are most common, that most people are aware of. Then within that, there are two subsets. There are public charities and private foundations. This is where a lot of people get these two misconstrued, because a lot of public charities will have foundation in the name. Private foundations are really organizations that are funded by a limited number of organizations or a single individual or organization. Think the Bill and Melinda Gates Foundation, any Delta Airlines Foundation. I'm here in Atlanta. You also have entities, the Woodruff Foundation, any large foundation, the LeBron James Foundation, which the funding comes from a single source. That's really what you would consider a foundation. Now, the IRS, with them being an IRS, of course, they have a formula to determine the difference between a foundation and a public charity. But the general idea is, if most of the funding comes from a single or limited source, then it's considered a private foundation. Both of these, the public charity and a private foundation, are considered charitable organizations. So what we'll do next slide, what we will do is go into, again, we just went into private foundation, generally receive charitable contribution from a single source. And then when we get into 501c3 items, they're the most numerous. They're they're generally operate exclusive for one or more exempt purposes: educational, charitable, religious, etc. Then we get into public charities. Again, we mentioned that we have two different subsets. You have private foundations and public charities. Public charities are divided into 4 subgroups. And those, so the thing about the public charities, the main thing you want to remember about public charities, they rely on grants, primarily gifts and program support from the general public, but they're also considered public charity. Definition of public is supported to the overall functions that they perform, or they support other public charities, which are known as supporting organizations. This is also very similar to a private foundation, because most private foundations distribute funds and support other charitable organizations. The next item here, when we talk about the 4 different types of entities meeting by a strict definition, if you're either one of these organizations, you're pretty much automatically considered a public charity due to your function. You don't have to meet any criteria. You have your educational organizations, schools, primarily. You have your religious organizations, your exempt hospitals. There are for-profit hospitals, but you do have some exempt hospitals also. Then, of course, we have governmental units. All right, Here we'll go quickly through some of the things that private foundations, because they put a lot of limitations on a private foundation because they don't want the individuals to take advantage of the various laws that they have in place for those. And as we stated, they generally receive their funding from an individual or a single source, such as an individual, family, or corporations. Then, of course, you have some of the criteria, restrictions on self-dealing. You must annually distribute income for charitable purposes, limits on the withholdings, and then investments must not jeopardize the carrying out. Okay. And again, note at the end, the private foundations obviously primarily do grant making more so than actually having programs. Now they can have programs but it doesn't mean that they can have programs, but they primarily do that through grant making, but they do have that option. Now, the life cycle of a 401c of a 501c3, and this is pretty much of any exempt organization. So we'll start in the top right, well, actually top left, then come clockwise at about 11 o'clock. You'll see we're starting out. You start by creating the organization with your particular state, with your organizing documents, your articles, incorporation, and your bylaws, etc. You start out there. Then it's not on the slide, but then you would get your tax ID number from the IRS. Then once you get your tax ID number, then you need to fill out what they call Form 1023 application for recognition of exemption. There's a full Form 1023 and there's a 1023-EZ, which you can apply online. The full 1023, the application fee is $600. The EZ is $275. And again, the EZ is required to do that online. And you can do that through pay.gov. Then you had your required filings. The required filings from the federal standpoint is your Form 990. And we have three different types of 990s, actually four, and we'll get into those in the next slide, but you're required to file your 990 as well, which is basically your tax return. It's from the IRS perspective, it's an informational return because it's not there's no taxation. You potentially could be taxed, but we don't want to go into that right now. Then you go on the next thing is your ongoing compliance. That's required filings with your Form 990, then your state requirements as well. Then you get your significant events, audits, private level rulings, termination. If you do not file your Form 990 for 3 consecutive years, your tax exempt status will automatically be revoked. And then you would have to submit your Form 1023 again. And unfortunately, I do those quite frequently, but you can reactivate that organization. So the next item we get into is the income tax. We'll have income tax, but in reality, it's informational return, but you can. So the 4 different types of Form 990, you have your 990N is electronic postcard. And that requirement, if your revenue is normally less than $50,000 a year, you can file the Form 990N. Again, that form must be filed electronically. You cannot submit a hard copy 990N. The next form is 990EZ. That's if your revenue is less than more than $50,000, but less than $200,000 during the fiscal year. But your assets should also be less than $500,000. You can utilize Form 990EZ. Then, of course, your full Form 990, if your gross revenue is over 200 or your total assets are over 500,000. Then the final one, which is for private foundations, which we mentioned previously, regardless of size or revenue, private foundations must file Form 990PF. All right, so this is what we have right now. These are the basics for 501c3 organizations. I will take any questions that we have at this time. Safi, did you have any questions, or did anyone in the crowd have a question?
Yes, someone did, but they had to step away. They're coming right back. But I want to just definitely thank you for that information, and it helped me get some insight. So
Okay.
if you want to just close out the share screen, I definitely want to go over
Okay. All right.
a
Great.
few items. And I find that, those steps are really important because a lot of people that I've come across who want to start nonprofits, they start running it before they even do all the setup steps,
Yeah.
Now
Yes.
I know there's like a grace period of some sort for doing the 1023 application. What is that?
Yes, it is. You're correct. But I would inform anyone, and I don't want to get, because I don't want to leave too much, but it could be up to 2+ odd years, but don't go with that. Actually, I think it's like 27 odd months. It's some convoluted equation. Of course, nothing simple with the IRS,
Right.
but I would always advise people get all of this done on the front end.
Yes.
Because if you don't, then you have to do additional steps for as submitting additional financial information, actuals versus budgeted information. And it's really not hard. What I've found, Safi, and I'm quite sure you know this, people have a passion, whether it's a for-profit business or a not-for-profit. Their passion may be whether it's blue-collar profession or white-collar profession. That's what they love and do. They don't really want to do the administrative stuff. That's why we're there. No different than us, maybe doing some things that we don't like in our lives.
Right.
So, but if you start the process right and do it on the front end, and I try to educate people that it's not that hard. So, don't run from the obligations that you have to administratively set your organization up for success. Start with it, do it correctly, and it'll be okay.
Yeah, definitely. And that's with every business, nonprofit, for profit, like you said.
Everyone.
The front end work is worth it. It's
Now,
administrative.
one thing I will really say on when the 3-word requirement of filing the Form 990, and I've seen this happen, people think, okay, we got 3 years. You do have 3 years to file at least a 990 in. But what happens, let's say someone just started an organization. We're in 21, right? So you just started, they'll forget about year 21 as the first year. So let's say especially if they started in the latter part of the year, they were approved, but you got to file a tax return even if you had no revenue in year 1. So they don't file in year 1, year 2, 22, and 23. So what happened, and sometime in the spring of 24, the IRS will let them know, hey, we've automatically revoked you. And in their mind, they're like, hey, we got 1 more year to file. Actually, you don't. So and so that does happen, and I've seen it happen. So always get it done. And you can, even if you don't have revenue, you still can file the Form 990 in. As I stated, it's an electronic postcard.
Perfect. And as far as like nonprofits and record keeping and programs and like not commingling, if there's any tips you could share on that, that'd be great.
Yes, great question. A lot of times, especially when John or Jane Doe starts out, hey, I want to do after school training program or teaching program, something that helping the community, because by definition, that's what they are. They see it as their baby. And I get it, you're emotionally attached, but a not-for-profit is not the same as a for-profit entity. And when you create a not-for-profit entity, you have a duty to the public to properly do your records, keep your proper record keeping, but also because the government is giving you tax exempt status, you cannot commingle funds. So you can't pay your, as you and I both know, even business owners, we try to tell them, separate your personal expenses from your business.
Yep.
And we break that out, but it's not as punitive with your for-profit business as it is your not-for-profit. With a not-for-profit, you cannot do that. You can't stop by and buy some groceries and use your business, use a not-for-profit card, or you may mean well, but you just can't do it like you can for a for-profit business. And even if it's for some things, let's say some office supplies or things of that nature, you have to make sure that it's being it's only for those type things. So you definitely cannot, for a not-for-profit organization, commingle personal and business.
Makes sense. Makes sense. Thanks for sharing that. So Clubhouse, sorry, I don't know how to pronounce your name. D-Raj, I know you may have had a question. Feel free, if you're ready, to raise your hand, and then we'll go ahead and I'll read back the question. Just get him on stage. Okay, hello? Good, good. How you doing?
I'm doing well. Thanks for bringing me up on stage. Sorry, I had to go for grabbing something to eat.
No problem.
Yeah, so yeah, I just wanted to, I do not work in the nonprofit space, but I get a couple of nonprofits, a
Mhm.
couple of groups that I interact with.
Okay.
That I moderate. I'm a moderator in. So, what is it that so you work in the nonprofit space as a CPA? I mean, you help nonprofit businesses as a CPA.
Yeah, so our guest speaker, Timothy Brown, is certified in the nonprofit space. So he's a CPA, and he works with nonprofits and helping them get, established, compliance, audits as well, if I'm not mistaken, correct?
Yes.
Mhm.
Okay, brilliant. So, he's not on Clubhouse, is it?
Not currently, but if you, I'm connected to you. So what I can do is definitely forward you his information that he'll actually share as we start to wrap up. But this information will be on my business page, so you can find the live stream there, and also I'll share his information to you.
Yeah, just send it to me on the back channel, because if I interact with a nonprofit and they need some help,
Hmm.
I can send them over to him.
Absolutely. Okay, great. All right. Thank you, D-Raj. I'll get that information to you shortly. All right.
Yeah.
Okay. Thank you. Bye bye. Okay. So D-Raj, I'll connect you to. He has
Okay.
some people who come to him, or he moderates rooms that there are nonprofits in. And so you'd be a great
Okay.
resource for him. So he didn't have a question, but just wanted to clarify that. So yeah, I'm not seeing any questions here. I
Okay.
think that was definitely a great overview, just to, get people started properly, and then they definitely can connect with you to make sure they're on
Yep,
track.
definitely.
And I know you're in Georgia, but you service clients all over, correct?
Yes, definitely
Okay.
throughout the nation.
Okay, awesome. So
Technology has allowed us to not be limited in our client base.
absolutely, absolutely. And it's, I'm sure a lot of people had to make that shift with the pandemic and so on. And
Yes, very much so.
thankfully,
Yes.
thankfully we kind of had that in place, and just,
Yeah,
fell right in line. The other things were a little bit crazy, but thankfully
exactly.
the virtual world was already in place. But yeah, I think the only other thing I want to mention is that um, there's some crossovers between, I don't want to say it improperly, but I think it's called a B Corp or something like that, where it's a mix of a non-corp, it's a mix of a nonprofit and a for-profit, but you're limited to how much you can make. I'm just going to give my personal opinion on that. I feel like you're either for-profit or you're nonprofit.
Yeah.
I
Yeah, and see, that's probably one of those that's deep in the IRS code somewhere that these large corporations, they're able to take advantage of.
Yeah,
Generally, 99% of people probably aren't even aware of it.
right.
So yeah, I totally agree.
Right. Yeah.
And
I think it's even a state that's, I don't know. I think the IRS, recognizes it, but I think it's something at the state level. Certain states allow it,
okay,
certain states don't. But, in case anyone's come across that or is thinking of that, I think you're just, playing with fire, because you have to be so restricted with those that I think it's just
yeah,
best to have two
definitely.
different companies. The other thing is that some for-profit companies, they take donations, right? Quote unquote. And that's not a donation, it's income if you're not a charity. So
Yeah,
just want to be really careful to stay on the line between nonprofit
yeah.
and for
It's
profit.
always good to just and that's why you can't, as an individual, separate your personal business expenses with your not-for-profit organization.
Right.
And trust me, I've seen a few horror stories.
I'm sure. I am sure. I'm sure you have. So,
uh,
so people, definitely just, make the investment, work with a professional, get yourself set up
exactly.
properly. The record keeping, bookkeeping for nonprofits is the same for any other business, even though,
Yes.
your profit is not necessarily taxable if it's done right. But you still want to have proper record keeping in place so that those tax returns can be properly filed. And so,
Exactly.
I don't, if there's no other questions, definitely whoever is here on Clubhouse or Facebook, this will be saved on Facebook on the business page, SDR Consulting Inc. It's also going to show up in the podcast in a couple of weeks. So definitely make sure you're following us. I'm going to go ahead and share, my closeout information. And then Timothy, I'd like you to give a little background about yourself and how people can contact you as well. So for anyone who's joined late, Safi Russell, CEO and founder of SDR Consulting Inc., a virtual firm based in New York, but we do business all over. And we mostly work with small business owners, helping them from business formation all the way through their tax preparation and all that fun stuff in between. And today we had guest speaker Timothy Brown, CPA, who covered nonprofit basics. So if you missed out, definitely come back and watch the replay. And Timothy, give a little background about yourself, your bio, and how people can reach you.
Okay, great. Again, first I want to thank Safi again for allowing me on her platform. Everyone doesn't do that, so everyone, please give her applause for being so gracious to do that. But it's just a benefit to her clients. Um, Again, my background, 20 plus years. I'm based here in metropolitan Atlanta area, and I've been CPA for over 20 years. I've been an accounting professional over 25. Ooh, I'm dating myself now. I've been doing this. I have my own firm. My website is tebcpa.com. Again, that's tebcpa.com. And my email is tim@tebcpa.com. So you can reach me through that. Again, I specialize in not-for-profit audits and consulting with not-for-profit organizations, and also help creating those organizations as well. But we also do business and personal income taxes as well, and monthly accounting. But again, I just want to thank you again, Safi, for being so generous to allow me on your platform.
Thank you for taking the time to share and volunteer. And it's always, great information we all can learn from each other, like you mentioned. So it's been a pleasure. And so we're going to wrap up the session. And Timothy, do you have a phone number?
Yes, the office phone number is 770-558-3825. Again, that's 770-558-3825.
Perfect. Okay, great. All right. So everyone enjoy your weekend. Stay safe. We will be back next Friday, 12 o'clock Eastern. Put it on your calendar, connect on social media at SDR Consulting, and also send your questions, or topics that you may want to hear about. We're definitely open to that. So everyone take care, and thanks again. Bye-bye.